Hi everyone, it's Stuart here again, and welcome to the proptrade.com. And we are live now for the non-farm payrolls. I know it's Wednesday, I know it's not Friday, I know it's not the first Friday of the month, but obviously we were delayed, or the data was delayed because of the government shutdown last weekend. So it's 5 calendar days late. Incoming in a minute. I'm fully exposed from a risk point of view. I've had a few of my forex trades, some of them closing out on target one this morning. I've closed the Nasdaq that was out of the money. I think I lost about 60 points, 64 points on the Nasdaq. Well, we'll go through all of those later. What we're looking for is the calendar. Sorry, my calendar. What we're looking for is a non-farm payroll data, the January data. I've got the investing.com calendar up here. It's a bit irritating because it sticks all sorts of adverts in it, but just bear with me for a second. Obviously, guys, anything you want to have a look at around non-farm payroll, remember it's a high impact event. Be careful trying to trade the news either before it or after it. Get out before. Again, I'm saying get out. I can't tell you what to do, but depending on the time frame you're trading, if you're scalping, don't risk the volatility of the data. Remember what the big players do. They use these high impact events for dripping and buying or selling whatever they're looking to get or looking to offload in these high impact events, whether it's forex, whether it's a commodity, whether it's an individual stock. And they shroud it in all the noise that's going on, the volatility. So we can see a big spike the other way, slippage, spreads widening, all sorts of things on these high impact events. So understand what you're doing, understand the mechanics of trading. And, if you're an end of day trader, this is just another data point. It's just another high impact data point. If you're, a tick scalper or scalping on the 1 minute time frames, you're looking for a few pips here and there, in and out. You don't care which way it goes. So just be careful. As ever, it's all about risk management. That's what we are first and foremost, traders. We are risk managers. We're protecting our capital. We're preserving our capital. And we're looking to, either build a career out of this, build a pot, have a plan. What do you want to do with your trading profits if you make any? The key thing is a mindset that's right and it fits with you. You trade a time frame, an asset, whether it's one asset, whether it's 40 assets like I do. And you're very mechanical. You just follow the rules and don't even think about it, which is great. Gets rid of a lot of stress. If you've got too much risk on overnight, you won't be sleeping. If you've got too much risk on over lunchtime while you're away from your screens, you won't be digesting your lunch or your dinner or wherever it is. So, well, excuse me, I've made a fatal mistake of coming up here without a drink this morning. So, anyway, I'm in our local office today, so I've suited up in reverence to the expo that's going on in Dubai. If you're watching in Dubai, if you're at the expo, give us a wave, give us a shout. I've got my little tight tie on. I've got my jacket back on. I've got my shirt on for a long time. And we're in our studio here in London. So welcome, everyone. Let's just run through the data. It's due in a couple of minutes. So earnings has been pretty good. Unemployment rate, the key three. Where are we? Is expected to remain unchanged at 4.4%. Headline number. They've got 75,000 here on the investing.com calendar. The Bloomberg and the Reuters polls this morning, when I looked, were both around 66, 65,000. The spread was quite wide, not massive, but relatively wide. There was an expectation from one bank, I think it was Standard Chartered, we're looking for 135,000 new jobs in January. Can be quite hot, the January numbers. We'll come on to that in a minute. Well, actually, the date is about to drop, isn't it? So we won't come on to that in a minute. But 135,000 is the top, negative 10,000, decline. I think it was it Citibank? I'm not sure it was Citibank, actually. Don't quote me on that. But there was a negative 10,000 and a positive 135,000. The consensus headline number, which always is the main mover, is around this 70,000. But watch the other things that come with this: participation rate, labour work week, with all this clampdown on immigration, and the hiring seems to be cooling. The other major news we've got today, which will be in the data, which I'll need to analyse later on. I won't be able to do it live here with you. Obviously, average work week and all that sort of stuff here you can see here on the chart is the seasonal and the annual revisions. There's talk of a total possible annual revision of they've overstated jobs by 900. There we go. So it is hot. It's come in 130,000. The president will be shaking that rattle quite significantly. Earnings are up as well. Unemployment rates come back down. So is this the combination of the clampdown on immigration, the clampdown on those illegal workers, as they call them, or the the gig workers, the people working cash in hand? We shall see. Let me just have a quick eyeball of that. Average out 3.7%. So that, again, we've got this dichotomy within the economy. We're seeing in many developed economies where those in jobs are doing quite well. Their earnings are going up. Their bonuses are holding up. Some eye-watering bonuses again this year, particularly for the bankers. The earnings season itself, just talking about stocks at the moment, has been relatively good. We've got a whole plethora of companies coming out now with some numbers as well after the big tech numbers yesterday. But as far as the jobs concerned, this is a hot reading. And the revisions, 1.1 million decline in jobs over the last year, potentially. 900,000, as I said, for annual revision. And seasonality could have taken another 200,000 off. That was the darkest expectations, but they're the extreme. So the work week, interestingly, has gone up. This is what I was talking about the detail. Payrolls, manufacturing payrolls, still incredibly weak. Remember, manufacturing in recession for well over two and a bit years. The potential signs of it coming out. It's actually turned negative the last few months. It's turned positive. Last few months, it's been quite significantly negative, 10,000. That's been revised from minus 10,000 to minus 8,000. If you can see that there yet, you can. But yeah, the headline, which is what's grabbing everybody: unemployment down, payrolls up. They will be singing from the rafters in Washington from the administration. That is exactly the sort of pump up the administration were looking for. So unemployment down, jobs up. We are the greatest administration ever. You can just see what the man is tweeting as I speak now. He obviously probably saw this beforehand. And as I said, look at this. These guys that are in work, up 0.4% for January, was declined, interestingly, to 0.1% for December, and down from 0.3%. So as the revisions come through in the next few months, we'll see. But this is clean data as well. That's the other key thing. So look at this as well. 130,000 from the 66,000. So it's right at the top of expectations. So I think it was, I didn't make a note of who said 135,000. I think it was, no, I thought it might be, no. I've got I knew Standard Chartered with the decline of 10,000. I can't remember who said 135,000, but they're on the money. So a big leap for the headline number, 130,000. Unemployment 4.3%. And let's have a look at the bit more of the detail. So private payrolls leaped again. So this crackdown in public sector working is continuing to move on. 172,000. It was moved up last month, nearly double from 37,000 to 64,000. It is a hot number because of the seasonality, because of all the people that get recruited for the holiday season. But there wasn't as many as normal in this cycle. So there mightn't be as many layoffs in the January cycle. So hence this potentially hot number. The wider U6 unemployment, I talk about this all the time if you follow me at all, it ticked up to close to 8.5% last month. It's down to 8%. That's still very, very sticky. U6 measures a much broader measure of an economy. So it's taking more weighting on part-time working, particularly people, second households, and people, second incomes in households as well. So that's quite a significant number. But 3.7% earnings have gone up again on an annualized basis. Whether that's a rounding number or not, that's come down from 3.8%. But this is pretty good. 62.5% again for participation rate. So although the jobs market, the jobs pool is shrinking, those that are in jobs are doing okay, and the participation rate is holding up. So manufacturing payrolls, I say, has actually turned negative the first time in a long time, and that's a number big shape that, again, the Trump administration will be shouting about later on. A decline in government payrolls of 42,000 in January, and the average weekly hours has ticked up by 0.1. It's better than going down or staying the same, 34.3. So that is a very hot non-farm payroll. That's very conducive for the US economy. That will now suggest that the doves on the Fed that they're definitely not cutting rates, certainly before Jay Powell goes. So it might push back. We have been talking about 2 or 3, potentially 3 rate cuts this year with Walsh in the driving seat, but that might push that back a bit. So let's just have a quick look how the markets have actually reacted. That's how I'm assuming things will react, but never assume anything, my friend, as we all know. So let's have a quick just use gold as a bad barometer on this non-farm payroll deal. Let's have a look at the dollar. The dollar was we were short across the board, the dollar, but let's have a look at the major euro, 118.50. So I've got a bit of a delay here. What's going on? Oh, come along. Are you still with me? I might have to close some of these things down. I've got on my calendar here. Let's get rid of that. That's not going to take much time. That hasn't updated. I've got an internet problem, man. Looks of things. I think I come in the office. So there we are. Our long positions have all been. That's been stopped out. Certainly, it's in the money, but that's been stopped out today. So dollar is bid on that, on expectation of the rate cuts being pushed back. So the dollar's picked up quite significantly. Look at the 5-minute. Again, guys, this is the risk. Remember, these are end of day trades, so expectations. If it hit the stop loss, I'd manage the loss. There we are. We've got a very poor connection. This is the euro. Actually, let me just make my head a wee bit smaller. That might be helping. There we are. This is euro on a 5-minute time frame. It's there we are. So dollars come back quite significant. Well, significant on this 5-minute time frame. So that's been stopped out. I guess lots of my others have been stopped out as well. But we've made some nice pips on some of the others and closed some of them out. So I'll update it all later. The Aussie 79. That's interesting. The Aussie's still holding at 71. Oh, come along. What's going on? So you come into the office and you expect a decent move. And so that's, there we go. The Aussie had hit target 1. It was still open. Stop loss had been dragged up. So that's second half of that one's closed out. The Canadian dollar, 135.90. Oh, dear me. What's the matter with the connection here? That was short, wasn't it? So, there again, another one that's hit target 1 and reversed. In fact, that reversed earlier, hasn't it? And that was this morning. It's 5 minutes, guys. So dollar's very bid, as you can see here, against the CAD. 136 has been breached. The yen will have come back as well. The yen was doing great guns yesterday. Big move on the yen, and again overnight. And we pulled our stop loss right down here to 153.85. If I just take this up to the daily time frame, I'm really sorry about this reaction. I'm not sure why I've got such a poor internet. It looks like it's an internet connection. It might be just the vagrancies of non-farm payroll. Again, guys, see, this is the risk of trading these high-impact events. You can get caught out. But there we go. We had a massive gain on the dollar yen. We went short there the other night at 155.84. Our initial target was here at 155.28. That was 30 or 40 pips. I can't remember. It was 30 pips. But then we just dragged our stop loss down overnight, and we put it here just above our 4-hour candle this morning, and that's been reversed into. So for the second half of that trade, or did I take 3 bits off this? I might have took 3 bits off this. I think I took 30% and then left 20% on the yen. There was one of them, I can't remember how we did it. Yes, there's so much going on. 10 might have been that, but anyway, we certainly made money on that one. 153.88 to the downside there, yen. So yen, and you see here, this is the 4-hour time frame. Remember, very, very well bid to the downside. Kiwi 60.44. Another one that we were open and short on. I may as well go through all of these. These the ones we've got skin in the game on. Swissy was the other one as well. Swissy's will have reversed. Interestingly, we left the stop loss down here and moved that on the Kiwi. So yeah, we'll look at this later, see if we continue to move to the downside. But we were in the money this morning, and then we've reversed quite significantly on the Kiwi. And the Swissy was the other one, 79, just under 80. Did we see this before? I think we might have done it. There's just this big reversal on it. Oh, come along. Sorry about this, guys. It must be just where I am. I'm assuming it's the internet. Yeah, that's been stopped out as well on that one. Oh, no, again, that's another one that had hit target yesterday. And the stop loss, did I not put it down? I can't, I don't know. I must have moved it down to the I'd have to check the platform. But anyway, that is now, the second half of that is now stopped out, and that's actually going to be a loser. I don't normally do that. I normally, when it's hit target, I normally pull it down. Perhaps I didn't. I looked at this. Is still. Oh, anyway. We'll see what the pips work out at later on. The other positions we had was the indices. So yeah, that's a hot number, guys. Yeah, everything is. Why is this so slow at the moment? Nasdaq had closed out this morning. Had I closed this out? Yeah. Hang on a minute. I did. Oh, I actually got a note of that. Yeah, 25,187. So 64 loss we took on the Nasdaq. So obviously, just haven't moved that stop loss on that. And there we are. Back to entry. The DAX was also stopped out last night because I pulled the stop loss up really tight on there. There we are. That got stopped. Was it this morning? Yeah, this morning we got stopped out. But again, we got in here. Target 1 was here. Target 2 was here. So that's made money. And the S&P 500 is the only other one we still got live, and that was out of the money, but I hadn't moved the stop loss, and that one is still open. So I left that one open. Nasdaq we closed down, so that's in the money. 6,970, and we'd got filled at 6,957, so 13 points on the S&P on 6,000. It's not great, but we got a target round about that key 7,000 level if we can get there. But as I say, stocks up, as you can see here. Let's again use Nasdaq as an example. I know more of you trade the Nasdaq than the S&P. So if we look at the 5-minute chart for the Nasdaq, big bounce on that. Really positive non-farm payroll data. Really hot. It is quite traditionally hot, I say, in the January time frame. The seasonality has obviously not been a pull. And I haven't seen yet the chatter about the revision. So presumably the revisions weren't as, it's nothing, you can't see anything actually on the, on the data here. Payrolls benchmark, there we are. So it's not as bad as expected. It came in, there we can see see this number there? The non-seasonally adjusted, that's what this means, NSA, non-seasonally adjusted payrolls benchmark. So we were talking, remember what I said at the top of the shop, we were talking about 900,000 revision. It's better than expected. Sorry, it's not as bad as last time. It's not as bad. It's better than expected. Sorry, it's worse than expected. It's coming at negative 860,000. So, however, the upshot remains that the benchmark payrolls, this revision here, seasonally adjusted, is coming at close to that, bang on that 900,000. So 900,000 jobs. This is why he sacked all the people in the Bureau of Labour Statistics. Or one of the reasons he used the data. I mean, these revisions happened all the time. There's nothing new to the Trump administration. They're just making a big more of not a deal about it, but focusing most people's attention on it, which isn't a normal situation. But this is, don't get me wrong, this is a really, really hot jobs market. So this is bullish for the US economy. This will possibly have a feed through to consumer confidence. We'll see what CPI looks like on Friday. Tomorrow we've got the weekly claims, which again have been showing this. Remember, we're down at that 220,000 on a weekly basis. The weekly claims have been incredibly resilient over the time. So we'll have a look at that, what that looks like tomorrow, and see what we go. So revisions more or less in line with expectations, but the non-seasonally adjusted ones here, worse than expected. The payrolls benchmark within 2,000 of the 900,000 we were talking about, and the seasonally adjusted, that 200,000 hasn't come in, but some good numbers in there. We've got positivity in it's still very, very small. Obviously, manufacturing payrolls only 5,000. The numbers we've seen sold off, and we've been having announcements all earnings season, haven't we, about job cuts coming forward, not necessarily in the manufacturing area, but that's the symbolic, sentimental area that Trump has pressed the button on. So what he needs now, between now and November, if he's going to survive the midterms, is some feel-good factor in people's wages, on people's kitchen tables, in their homes, and costs to come down. He obviously keeps banging on about the cost of fuel and being a big issue. So oil prices as well, crude prices, petrol prices, gas prices, as they call them in America, key. So this is strong numbers. Don't get me wrong. So the stock markets are higher. The dollar is stronger. Was stronger initially. See how it's cooled down a bit. However, our Billy Bitcoin has been down at 67,000 today. So Bitcoin holders, there's that 66,000 we saw this morning. This is obviously just a 5-minute chart, but we've been lower again basically today, 67,000. So the trend remains to the downside, my friend. This is really annoying me. It's delayed in the chart refreshing. There's our hourly chart since the weekend, and we've been looping lower. The highs, you can see here, the highs are getting lower. The lows are getting lower. 65,000 is calling that midpoint between 70 and 60,000 that we spiked into. Last Thursday, we went down to 60,000 before we find the buys. So 65,000 looks like it's calling, and the trend remains set to the downside. Our daily time frame, with all our support areas to the upside, all breached really significantly, and that huge down candle on the 5th, where we breached 70,000 really significantly. We came back quite nicely the following day, but it was an engulfing candle, and we've failed to break away from 70,000 for the week, and now we're down again, so testing to new lows this week on the Bitcoin market here. You see here, the stochastics here are still turning up off this big up candle, so see. But pressure remains the downside. We're well inside the angled down Bollinger Bands. The 20 days all the way up there at 78,000. We're in that lower percentage. So we've been out of the Bollinger Band all this way down. So are we going to consolidate here above 60,000, 65 and 60,000, or are we going to have to get to 65,000 before we start to consolidate? Somebody is ringing me. And I can't speak because they're calling from Dubai. Sorry about that. Down we go with the Bitcoin market. Anything else? Anybody got any comments? There's nobody here. I wonder if it's my internet connection. I wonder if it's actually still working. I might be just talking to myself here. But anyway, that's been a bit of an exciting non-farm payroll for the first time in a long time. So we've had some a movement. Let's just have a look how we could have possibly traded that with our strategies here. Let's just use the euro as an example, and how again it'll show you. I mean, what happens is afterwards, lots of people see the way the candles move. Say, oh, what if I could have done this? I should have done this. Blah 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 blah. Right. Okay. Let's. Okay. So I was long this from close of business on Friday on the 9th, a couple of days ago. We were out of the money most of the time, and I've been stopped out. Stop loss hasn't moved. It's an end of day trade, so I have a losing trade. Take it on the chin. It's part and parcel of your trading. If you can't cope with losing trades, my friends, go and do something else, because you will never succeed. And watch my lips. You will never succeed as a trader if you can't accept losing. And too many people, old or young, male or female, or whatever gender you assign to these days, will fail as trading if they don't understand themselves. And basically, you have to understand yourself. You have to deal with your risk profile. if you're going to succeed in the world of trading, and accepting losing trades, because they come along a lot more frequently than we kid ourselves. And again, our brain is here to protect us. Our subconscious brain in particular is here to protect us, and we get beaten up quite a lot. So just watch this space on that one. So stopped out here on the euro on the end of day basis. So what's this telling me? Well, the daily time frame is still bullish because we're above 118, and the 20-day moving average is at 118.10. So this is still a bullish uptrend on the daily time frame. We don't really care about that for trading 5 minutes, do we? But let's come down to the time frames using this strategy. So the 4-hour time frame. So this is just triggering long potentially today, that one. So the 4-hour has been flattened out. It sort of suggests there's a shortish there, but look at this, didn't move. It stopped you out potentially, but then it's moved down, and it's still. So the 4-hour is down. It's hit its first target there. Again, I say if you've been using this strategy on the ignoring the volatility of non-farm payroll, but you've hit target 1, and target 2 is there, 118, the bottom of the Bollinger Band. Hope you can see that. Let's does it get a bit bigger one? Yeah, there we are. It's a bit bigger. So you got my horrible. Look at my tie. That's not straight. There we are. This is euro, guys. If just for so it's nice and big on the chart. That's the only reason I've made my head so big. So that's short. So let's have a look at the hourly time frame. This should have turned. Obviously, this is turned lower as well, courtesy of non-farm payroll. But the hourly chart, the 1 o'clock candle, isn't yet complete, and it's taken forever to fix. What is going on here? See, I come to this studio, and it's worse than in my home back bedroom. I normally do my pro test. It's probably capturing all the data because I've got a tie on. It's probably the internet's probably flagging, saying, "Oh my God, the old man's got a tie on again." But, anyway, so what was going on here? So this was touched the outside of the Bollinger Band, the cross, upward movement of the stochastics. You wouldn't have got there. You'd have left it till there. It's a very weak entry there. That's the strong entry. Not until 2 o'clock this morning if you were around. So target 1's been hit. We are now looking to go short. That's gone short there, but confirmed there. Interesting. Look at that. It's confirmed there at 11 o'clock this morning, euro on the hourly chart. Again, taking a little bit off. Probably wouldn't take anything off. Might take some off at the end of that candle there, knowing that non-farm payroll was gone. It could have gone anywhere, so they'd probably close it down. But if we'd stayed with it, stop loss up here at the turn, second candle, and down we go, and probably bag some profits as we've got down here and taken some out, and then just trailed our stop loss. Got our stop loss a bit tighter, possibly here or at the top of this candle. See how it finishes. So that's how the hourly would have been trading this strategy. Let's go to the 5 minute. Unless you want to look at different time frames, again, let me know. So again, you see the bounce strategy bouncing around going nowhere. So it was long. That's a nice short there. Although we hadn't actually touched the outside of the Bollinger Band there, so I'd have ignored that. It's then ticked up here, crossed up, but then crossed down quite significantly. So that's a key candle there. Again, that's at 11 o'clock. So you see the 11 o'clock hourly candle following through here, but the 11 o'clock 5 minute candle, that's quite a key one there. Why am I saying that? Because it's counteracting. Let's just go through them all then. Explain my thought process. Obviously, at this point, we make money on this white bit. At this point, if I rule this, let me try and stroll that. That's not going to let me, is it? No. It's going to show me it all. Can't move it that way. I can't get rid of. No, it doesn't want to let me. Oh, yes, it will. Hang on. There we are. So, right. So here, this is our 5 minute trade. We're bouncing up and down. Nothing's happening. We've gone to the extreme here. That was a potential short there. Went in, but then we got stopped out because we had a big tick up there. So actually, let's take it back a candle. So here, at this is 10:40. We look like this is the biggest 5 minute candle we've had all morning. This is 11:40. It crossed. They made the lagging K and D line on our stochastics cross eventually, and we moved up. We popped higher. And for the next 10 minutes, we moved a bit higher, and then we pushed the high of the day at 19.26.8. So that would have been quite bullish. We'd gone higher than we had done here at 6 o'clock this morning. So we pushed higher, but then we moved down and then we reacted. So the reason the following one was, the reason the following one was key because it was more negative. It opened lower and it closed lower. So this move up has been rejected and we're now in the under half of the Bollinger Band. So that's a key one. And look what's happened to the stochastics by now. So by now that's a little blip higher, hasn't worked out. We are now short. Just as much we would have been long there with our stop loss down, possibly down here at the bottom of the Bollinger Band, maybe a bit tight in the turn. But anyway, we've stopped out on that one and gone short because we've had another cross here. The blue has come from above to below the orange, and we're moving down. Obviously, at this point, that's what I was trying to start this story, isn't it? At this point, we don't know what's going to happen. Remember, we make all our money on the right-hand side of the chart. We lose all our money on what happens on the right-hand side of the chart as well. But the rules were go short here and down we go. We got in here outside the Bollinger Band's a bit too close to close that, but we're strolling down. Look what's happening to that. So we'd have got down here and I'd have closed it out there as we'd crossed again. We started to move up, but it was a weak move. So we've gone long again there, but now it's been immediately sold off. So we've gone short again there, and this isn't helping us now, is it? The trend, see, remember, this is a mean reverting strategy. The trend is pushing us lower. We're trying to move up, it didn't happen. We're trying to move up here, didn't happen. Look, and even here, as we come into the data at 1320, nothing's happening. We're drifting lower. So taking longs would have been a question. What happens? Data comes out, bang, down we go. This crosses to go back up, but it's a weak retracement. So again, what's happened? Well, let's just do, as a scalper, let's just do what happened when the data came out. How did the market analyze it? Well, that was the range we took on the 5 minutes after the data dropped. A very, very strong for US economy data drops. And what happened? Well, immediate reaction was to sell off. We then retraced, and look what happened. We came back quite strong. We came all the way back through the 50. 5 minutes later, we were back through the 60, and this was looking positive. But then we immediately sold it off again as well. So this, the move is probably done for now. So the trend, the higher time frame trend, might take over. So let's go up. And what are we doing? Well, if we go up to the 15-minute chart, go up in different steps this time. Go up to the 15-minute chart. Well, we've been sort of long last night into this cluster area, and then we've been down on the main data of the day. So the trend is down. We've pushed a new low of the day, but just before that, remember, we'd had a new high of the day up here at 1928. In fact, what was that? That was yesterday. So new high of the day, as we said earlier, in 1928. So we're down from the high of the day, and we've pushed a new low today. So we're biased to the downside there on that 15-minute time frame. Again, if we step up, let's just use the 2 hours as an example and not the 1 hour. The trend was up, and it's obviously getting reversed now on this data. So nice up, congestion through here at 119. Can't push higher, and this current candle, it's about to close, a 2 hour candle, remember, has pushed it lower. So again, next move, well, we'll see. It may be lower, may not be lower. So the trend for the day, we go back to, say, the 30-minute. And the reason I'm jumping between timeframes here, guys, is it's best to obviously trade on one particular time frame, but you can see the story developing in all these timeframes. So we've been, again, 30-minute congestion sideways here, right from the 9th of February, last couple of days, not really going anywhere, pivoting around that 118 area, pushed to 119. And then, but here you see this morning, lower, and then the big bang as the data's come out, lower. So again, trending lower here on our stochastics, touch of the outside of the Bollinger Band, no cross. The trend has outbid the mean reverting strategy. Remember, that's all the markets are doing. All the markets are doing is trying to find a buyer and a seller to these orders that are in the market. That's all the systems are doing all the time. So trade what you see, not what you think. It's an old cliche, but it's applicable. So let's just come back to our 5-minute little fib level we put on the big candle and see what's happening now. So let's just read size that. So we've rejected the 61 immediately, and we've slipping under the 50. It's not massive, but the new that has completed, and now we're lower again. So this suggests we may be looking to move lower again on this time frame, despite the tick up we've got in the stochastics here on the 5-minute time frame. So the result of it all, a stronger dollar, as on the immediate reaction. Now we're going to be waiting for inflation to confirm this. Remember that inflation and jobs, the two parameters that the Fed are looking at all the time, and that data, the CPI data, is coming on Friday. So let's just have a quick look then at our free Fed Watch tool that we find at CME Fed Watch here, and see how if that has changed already from the data. When was the data? The date was half an hour ago. So let's just have a quick look at that. Let's get rid of my huge head again. And see what we are looking like now for the months ahead. So nothing's changed here. 94%, nothing happening in March. Really, nothing is going to happen in April. Really, now. Well, certainly wasn't going to, as far as the market was concerned. 6% chance, only a 6% chance of some action if this data continues to heat up. That may have changed recently, actually. No, it's gone down. It's gone down the other way. Cost, it's gone down the other way, you fool. Yesterday, we were at 21%, absolutely 94% of no chance. It was 80% yesterday. So we've swung back to where we were last week, basically 90%, 94%, so 6% from 9%. For the next meeting. Remember, we've still got. Whoops, let me just push it up. They don't meet till the 18th, so we've got another non-farm payroll data at the beginning of March. And again, assuming there's no more government shutdowns, that'll be clean and as expected on the right date. So we'll see what that looks like. 29th of April is Jay Powell's swan song as chair of the Fed. His last press conference as chairman of the Fed, and again, still an 80% chance of no change. 25, 350, 375, 20% chance of a potential. So it's 80-20. We would get a cut at that meeting if the data obviously needs to warm up quite significantly. I'll continue to warm up quite significantly for I feel they can start to cut as early as April. Most are anticipating a cut in June with Kevin Walsh with his feet under the table, and a potential, now as 70%. We had all this up, so it's 50, 60 odd percent chance of at least a 25 basis cut at the June meeting, and I jumped forward to the June meeting there. So still a 40% chance of that not happening. So it's perhaps not as robust as we thought. But look at the jump we've seen from today's strong data. It was only 24.42. So yesterday at this rate that we were staying there, that's gone back up to 40% chance of a no cut at the June meeting as well. So back again, swung back to where we were. So the data's this idea of 3 cuts this year is likely to have dimmed somewhat on that particular data point, key data point, the non-farm payroll. As far as the psyche of the US economy is concerned, I've always questioned for many years really, is this obsession with jobs every month in the United States healthy? We'll see how we go forward. I've just brought Bloomberg Terminal here. They're interviewing some guy from Washington. It looks like it's a deputy secretary. He's talking about the seasonal adjustments cut by July versus June previously. So that's what we've just been looking at, don't we? That June cut seems to have been pushed back. Interestingly, the Treasury market, which had cooled quite significantly, we're down at 4.14%. We were at a 2-month. I it was 2 or 3 month low for the 10-year at 4.14. The 30-year here is on the screen at 4.8. And so dollars picked up. So we've pushed from June back to July. Yeah, it's the deputy, I recognise him, Pierre Yard, Chief of Economic Council, acting chair. So he's Council of Economic Advisors, acting chair. He's taken over the position that Trump's man, Myron, got on the Fed, which is coming to an end as well. So there we go. Very interesting for a change. I don't normally say that. Very interesting non-farm payroll for a change, as I say. Where's my calendar gone? Our investing.com calendar. So some hefty numbers in there. The revisions were in line with expectations, just around about that 900,000 decline. But what's going to grab the attention is the 172,000 new jobs in January. So there hasn't been the shedding of jobs for non-farm payrolls, private non-farm payrolls, and the headline 130,000 compared to that 65,000 the Bloomberg and Reuters polls had for payrolls for January. So it's a big beat, and unemployment rate slipping again, and average hourly earners going up. So it's just all good news, and I'm sure Trump or whoever sends his Truth Social tweets or posts out will be very much on the keyboard as we speak. So I will see you all again tomorrow, probably for the payrolls, weekly payrolls from same time tomorrow. So in the meantime, stay safe. I'll update where we are with our 10 open trades. A lot of them obviously been closed out, as we've seen. See how we come out in the whole balance of things. Gold was still open and long. Lots of the other dollar positions are still open. SPX is still open. S&P open. NASDAQ, I did close down earlier this morning. And the NASDAQ and the DAX had closed out the second half of that trade. But we'll update all the numbers later after I've had some lunch, because it's 2 o'clock here. So anyway, guys, if there's no questions, I will leave you with the everyone's favorite, which is the gold chart today. Let's look at the gold chart, 5,075. Let's go back. That's a 5-minute chart. It's a bit narrow, isn't it? Our target earlier. And oh, there we go. Interestingly, so our gold position is actually closed. My second gold position is closed. So 50% would have been closed here at the target. I'd obviously dragged up my stop loss earlier. I'll have on this chart. I'm pretty sure I must have done it on my trading platform as well. So that's now closed. So I haven't got a gold position in as we've come back down. There you can see on the hourly chart from my target to my stop loss has been hit on the very strong non-farm payroll data. So gold currently trading at $5,075, close to not shy of that 5,000, of just holding above the 5,000, which is key, and obviously our all-time high from October. Was it October? February? End of January, wasn't it? 5,600 as the geopolitical climate seems to be cooling. The Iranians still desperate to keep talking with the Americans, but Russia's still not showing any interest in peace deal with Ukraine. As not much of a surprise, is it, really? So anyway, take care, my friends. I'll see you tomorrow. Be good, be safe, and be kind to one another. And may the pips, as ever, be with you all. Okay, I will see you shortly. Adnan, my friend, hello. How are you? It was a big surprise indeed. No change. Have you just come on? Yeah, just come on. Adnan, hope you're well. Forex Source. You didn't need to see Adnan here. I recognise your little picture. Hope the family's well. You're staying safe. What was I reading about Pakistan this morning? Oh, you're apparently they've done a deal with China to export donkey meat. They're quite pleased with themselves, the Pakistani government, apparently. Let me know on that. Big moves today. I hope you're at the right side of it, my friend. Take care. Love to the family. I'm off now to get some lunch. We can chat on WhatsApp if you want later. All right. Take care, everyone. All the best. See you soon. Thank you, Adnan. God bless you, my friends. Stay safe. Ramadan's coming up, isn't it? So be good. Lunar New Year next week as well. So lots going on. Be good. Be safe. Take care. All the best, everyone. Bye-bye.